Today is Monday, June 21st, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, grain and oilseed futures have traded below support. Is this justified, and what is the underlying force for future prices?
Well, personally, I don't think it's justified to be this low this time of the year because there's a lot of weather uncertainty. And obviously, the number one thing will be weather. It just seems like parts of the Midwest is not getting as much rain as what we're trading. And then at the end of the month, we have some USDA reports on acres and stocks that will be critical for price discovery.
Steve, let's talk about the weather. What's the latest in the U.S. Midwest weather forecast?
Over the weekend, some of the rains across the central Midwest was better than expected, and that's why prices are down. We still are seeing less rainfall than what's needed in the Dakotas, parts of western Minnesota, western Iowa, and also Nebraska. And when you look at places like Des Moines and Marshall, Minnesota, Omaha, Nebraska, and Fargo, North Dakota, over the next 10 days, they're not going to see much rain, and temperatures will gradually move higher. Now, east of that, people are getting rains, and the conditions will be favorable. And I think the next 30 days, the areas that are dry will remain dry, and then east and south and southeast of that, we'll see normal weather.
Steve, you mentioned next week's report. We have the June 30th acreage and stocks report. What do you think the USDA will say?
I think it'll be a really volatile and explosive reaction to whatever they say. When you take the average guess for June 1 stocks, corn, beans, and wheat, and you take the average guess for corn acres and bean acres, anything below that, and I think the market finds new buying and moves a lot higher. Anything above that, and the market might go lower and then stay lower for at least a couple of weeks until we start trading weather again. So probably the most important report so far this year by the USDA.
Alan, let's start with the greenback this morning. What is your outlook for the U.S. dollar index?
Well, first of all, the dollar index firmed quite substantially late last week with the Fed coming in with their hawkish surprise, but I'm starting to believe that these gains will not follow through. In fact, we're seeing prices lower today. Don't forget, we still have the underlying negative influences of the budget deficits and all of the extra spending, infrastructure spending that is in the works and being planned. So from here, I think the dollar index will probably come under some downside pressure.
Alan, let's talk about interest rates a little bit more here. Tell our viewers, what are the economic implications of a flattening yield curve?
Well, basically what we're seeing is shorter dated yields increasing to reflect higher interest rate expectations, while longer dated yields fell because higher interest rates in the near term would likely mean slower growth in the economy in the future. So the flattening yield curve has some, I think, negative implications as far as economic growth down the road. Also, it suggests that the rate of inflation, in my opinion, has already peaked.
Interesting. Alan, one final question for you, and it pertains to the stock indexes. What is the significance of the NASDAQ futures advancing to new record highs last week, despite the hawkish surprise from the FOMC, the Federal Market Open Market Committee?
So the fact that the NASDAQ was actually able to make new record highs when all of the indices should have come under pressure, and they did for a while, but a very strong recovery in the NASDAQ. In fact, we're seeing stock index futures sharply higher today. So the fact that the NASDAQ ignored bearish news is a sign of strength for the entire complex. Also, the NASDAQ traditionally has been the leader in both directions. So with the NASDAQ advancing, and as strong as it is, suggests that the stock index futures trend is still higher over the near term.
Well, the markets are interesting. There's a lot of volatility. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.